Let's go to Dubai and bring in Nadia Elbilassy, Senior Market Analyst at Equiti Group. Great to have you back, Nadia. Investors seem pretty calm. Maybe they're getting used to President Trump's tariff threats. This time it's South Korea in the scopes. Why do you think the markets aren't reacting more negatively?
I think this has already been priced in. As we saw in the past week, that we saw Trump threaten 200% tariffs on Europe's wine, and then negotiations happened, and then everything was okay after. So I think markets have come a bit accustomed to that. There's going to be threats, there's going to be negotiations, and everything's going to end up being fine. Also, if we look at China, China's trade surplus has done a staggering 1.2 billion of exports to rerouting to other countries. So I think that we've learned the lesson from China and the US trade war that things eventually end up being slightly okay. So I think this is why markets are not overreacting as well, that it's priced in that these political flare-ups happen from time to time. But still, what's really driving markets upwards is the AI and the tech sector and earnings that are still doing really, really good.
The Federal Reserve make a decision on Wednesday. What effect has been, well, as I was going to say, what effect would a hold in interest rates have on the markets? And what do you think the markets have priced in so far? What are they expecting?
Already like 97% of the futures, we already think that they're going to keep a pause on interest rates for sure. But what we're looking forward is what Powell is going to be saying about the forward guidance for the year. So I think that we're expecting 2 to 3 rate cuts, and I think that with inflation slightly being put together for the past couple of months, not higher than 2.7%, I think this is also giving markets a bit of relief. But I know that because we are near the 3% trajectory, so definitely it is a bit of worrisome in some sort of aspect. But I do think that we're going to have a pause. But what we're really looking for is the forward guidance. And I think that markets have already priced in that there's not going to be a interest rate cut this month or this week, actually. So this is why we're seeing a bit of mixed volatility in the markets. And aside from safe haven demand really climbing upwards because of all the uncertainties, especially in the political arena that we're looking into.
Seems like the markets have quite a lot of certainty when it comes to, say, interest rates. I imagine they're a bit more insecure when it comes to, for example, where the AI investment's going. So we've got the mega cap tech earnings being announced shortly. What do you think those companies will need to deliver to convince investors that the only way is still up?
I think they need to deliver the marginal cost for this. So margins are being hit hard. If we don't see profitable income coming from all the AI spending that we've seen over the past couple of years, this is really going to hit stocks. I think this is the only thing right now priced in to actually take major indices or stocks really to lows and end the rally. Just the spending on AI and the profitability margins that we're expecting to see from earnings in the next couple of weeks.
Nadia, it was a pleasure. Thank you so much for coming on. Nadia Elbilassy, Senior Market Analyst at Equiti Group.